Hi there, it's Nick here, founder of the Spartan Trading Academy. In case you don't know me, I'm trading Forex, stocks, metals, and everything that moves since 1999. I started trading Forex actually in 2004, 2005. When it was easier to do this online. And since then, I'm also a trading coach and I train people from over 80 countries in the world. So what I want to do today is I want to invite you to what we call like my little trading secret online course to show you what I exactly do to overcome issues like fear and greed, and how I apply the Spartan system with like bounce trading, breakout trading, classic 1, 2, 3 setups, a system that I created myself using a few indicators. I will explain everything to you. Now, just getting into those details without explaining the basics of the system first would be probably not annoying, but probably complicated for you to understand. So what I'm going to do is I will give you the system basics, the Spartan system basics right now in this video. So I hope you enjoy it. Before thinking about joining the course, I would like you to study this video very, very well. If you have any questions, you can send me always an email. All the links are below here. And then join the course. So first study what we are going to do here on the charts, and then decide if you want to be part of it. For sure it will be great. I know that because I have a lot of experience. We get a lot of feedback. I don't want to sound funny, but you will figure it out yourself. Okay, if you like the video, by the way, make sure you share it with friends or people that are into financial market trading. I'm sure it can be very, very helpful to you. Let's start. Okay. What I want to do is I want to share with you I want to share this chart with you here. This is the GBP JPY, where we already have positions running since January. We are talking about big swing trading positions. So the good thing about the Spartan system is that you can combine all time frames on charts. It's a technical based system, and it's about technical analysis. It's about understanding what the markets do and then take action. It's also about let's say controlling your emotions, fighting the little devils in your head, and figuring out how to overcome those issues like fear and greed that everybody has while you are trading. So what I want to achieve here is to give you the basics, so later on you can create your own trading style. Now you can use my system, the Spartan Trader system, but you will apply your own style, and it will make things much easier, because remember, we have all to always remind ourselves that we're all different, right? I think differently, you are thinking differently, and therefore we can all use the same system, but we will act differently. Therefore we have different results, and everybody needs to find or fine-tune the rules so it suits you. Let's start with the basics. Those swing trades are running. This is a trade I took a couple of weeks ago. This is one that is starting, that we started in January, and you can see there's a tiny position running on the first entry, and there is still a bigger position running on this entry here. We also have an order in place, but that's something else. Let me just explain. What we are using is a simple 36 EMA moving average. Now this is a simple one. We don't want a simple, sorry. We actually want an exponential moving average. It was just a mistake. We also want the 12 exponential moving average. We want the 200 EMA and the 633. Now the red EMA for us and for our charts, and it doesn't matter Whether you trade Forex, stocks, metals, it doesn't really matter. This EMA is our trend following EMA. In a good trend, this is acting as a trend line in combination with the trend line that we are going to draw. The 12 EMA is the volatility EMA, just helping us seeing how powerful the price is moving in one or the other direction. So if the price is close to this blue 12 EMA, it tells us that there's a lot of pressure. In this case, if the price is above the 12 EMA, it's telling us that the buyers are stronger. If it's below and it's always touching it, then we know strong volatility to the downside, so the sellers are stronger. The 36 EMA is, as I said, a trend following EMA, and as long as the price is above the 36 and retraces back to the 36, this is also telling us that we have a strong uptrend. The other way around, price moves below the red EMA 36, we know that the price is in a powerful downtrend. It could be like in this case, that price does not retrace back to the 36 at all and only retraces back to the 12. That means that we have a lot of volatility on this particular time frame. Okay, and the 36 cannot keep up. One thing we always have to remember is that the 36 EMA and all the EMAs are indicators that are lagging. They're always late, and the only reason we use them is just to help us identifying a trend, a range, and a direction, plus an area of support and resistance generally. Yeah. Most important, and it is something you have to always remember, is price action. The price is the only tool in trading that tells you the truth. Everything else is either late or not good enough, but it helps us to identify, as I said, directions and ranges, especially at the beginning. Other than that, it's useless, really useless, no joke. What we also like to do is adding Heikin Ashi or Heikin Ashi candles. I don't really know how to spell it. I don't know Japanese, but it doesn't matter. This is a tool you can find on MT4. We use MetaTrader for our trading because you can get it free. You don't need a broker that has MT4, but we like to use it for our charting and making decisions. I personally will use it just because, not only because it's free, but because it's really good, working steady for many years now. Heikin Ashi candles over price action, so not the classic standard like candlesticks, but Heikin Ashi candles. Why? Because you'll see the strength of buyers and sellers in each candle without needing to identify a doji or a pin bar or whatever, engulfing patterns and things like that. No. White, in this case, I gave it the color white. You can change the colors, of course. White means buyers are stronger. Red means sellers are stronger. It's that simple. And when we see candles closing higher than the previous candles for a while, we just identify the volatility and the direction, and we know that we have to trade long here, meaning buying, and if they're red, we also know that we have to focus on shorts mainly, meaning we sell. Okay? First thing I want to teach you here is identifying a direction after using this template. You can get this template on our website, spartantraderfx.com, for free. You can just download it for MT4, right? Now, to make it really simple at the beginning, I will get rid of the 633 EMA and the 200 EMA. The question I often get is, why do you use exactly those EMAs and not another number? You can add whatever number. That is just because over time I figured out that those combinations are best for me and my trading. The trend following 36 EMA, the volatility 12, The 200 EMA I'll use for bounce trading in combination with horizontal support and resistance. And the same I do with the 633. They also give us some other nice clues, but it's not the time to do it right now. Okay, so first we want to identify direction. And now I want to tell you something that really not many traders are aware of. Like the higher time frames, I'm speaking to you directly now here, are not used by many traders. Like a weekly chart, daily charts, maybe only 1% are using those charts really to make decisions. And believe me, just by doing that, you have a big advantage over everybody else, because the weekly and the daily charts will give you the main directions, will show you what's really going on. Okay, let me show you on the chart. This is a weekly chart, and if you don't look at it, you don't really know what the main trend is. And the weekly chart, because the price is below the 36 and it's really moving down, creating lower points on the chart, I just know it's a downtrend, and you just know, just by looking at the latest candle, you will figure it out. Also, it's below the 36 and the 12 EMA. If you check a 1 minute chart, for example, on the 1 minute chart, you will never know what price is really doing, because right now it looks long. But you don't really know that this is a big downtrend, and many traders just trade on the lower time frames because, okay, it suits them, but they still understand what's going on. Most of the people, I'm talking about over 95%, don't have a clue. They just listen to what the brokers advise, and a broker wants to make money. The brokers want you to trade on lower time frames because you will place 10, 20 trades a day, and they make spreads every time you click on the button, right? When you look at the higher time frames and you make your decisions really on the higher time frames, then the brokers don't make much money. So the whole business is set up that way, that people trade a lot, so the brokers make a lot of money. But that doesn't mean that you make money, because if you lose all the trades, the broker still gets his share, but you don't get anything. So it's very important that you remember doing the top-down approach, meaning we start from a higher time frame, go to the lower time frames, and then we make our decision, ideally in the direction of the main trend. Okay. On the weekly chart, price is pointing down, it's below all our EMAs. You can draw a trend line on the previous uptrend by connecting the retracements, meaning the pullbacks. Price is moving up, then it's retracing back down. It moves up, it retraces, it moves up. So when we have a strong uptrend, it will create a high and then a low. But this low is higher than the previous lows, the previous retracement. So we have a high and a higher low. A high, not a new high, but it's still higher than the previous down here. And then a low, and then at some point a higher high and a higher low, a higher high and a higher low. This is how you identify a trend. And here you have an uptrend by just connecting the retracements with 2 or more touches. Better 3 and more. 3 and more touches is giving you a good direction. You extend it, it looks like this. Now you have a combination of a trend line that you draw with retracements. Look at this, price goes up, retraces back down, moves up, goes down. It's breathing, it's a living thing. Remember, these are millions of traders, thousands of people trying to make money, but only the ones with the big pockets and the people that really look at the higher time frames, they know the real direction, and they make their directions and push it up. Okay, in this case, everybody else gets lost, as they say in translation, right? It's like on the lower time frames, it's too much noise, and most traders get kicked out, unless they know what they're doing, of course. And as you can see, what I mean by living, it's breathing in, breathing out, breathing in, breathing out, because people close their positions, they take profits, people get stopped out, price retraces, and in a big trend it will continue like that. Sometimes an angle of a trend line has to change when you have a range for a while. Price is still going up, but slowly. The 36 is still below the price, so as long as that happens on the weekly chart, it's an uptrend. It's an uptrend. Even if it's breaking a little bit, if it continues to move up, it's an uptrend. Only when the line breaks and price starts to create lower highs and lower lows, in this case we have a lower high, first sign of a potential trend change, because price does not bounce on this line again and does not move up again. So what happens, it breaks that line, it moves lower. Now you get your lower low and your lower high. It's breathing in and out, but now in the other direction, breathing in, breathing out, breathing in, breathing out. Knowing that is really almost half of what you need technically to understand in which way you should trade. So below your trend line with more than 3 touches and the 36 means that you want to focus on short trading, meaning you want to start selling. If you have done your top-down approach starting from the higher time frame, you then go to the lower time frame. In this case, it's the daily chart. And we'll just go a little bit back in history just to start for you to start understanding. Those are the lines from the weekly chart. Now the daily chart after the weekly chart, after understanding and seeing the main direction, the daily chart is giving you also the volatility and again the trend you want to trade in. And in this case you want to trade short, you want to sell GBP against the yen because it's going down. When I connect the 2 touches and extend them, ending up at a 36. So here I have a lower low and a lower high, and then I have another low and a lower high, and as long as I get those, I trade shorts. If I extend this line, at that point you'll see prices going down, retracing to the 12, then back to the 36. It's bouncing off the 36, ranging, and then moving lower. If I extend that line, you'll see it's ending up at the 36. So what did the price do on the daily chart? It went down about 600 points, almost impossible to see on a lower time frame. On the lower time frame, what you'll see is price going down. So you probably think, okay, great, this is now a downtrend. I don't have to put any stops, it will go my way. But then price retraces over 400 pips just to retest our 36 in combination with a trend line. And that means that if you were short somewhere and you don't place any stops, or you don't know how to protect your account or money management, on the way on the retracement back up, it will kick you out, it will kill your account, and then you start from scratch. And that happens to many people. They start trading Forex, they get lucky once or twice, they push the button and suddenly things go against them and they don't know why, and they always say, hey, somebody's watching me, and every time I hit the button it goes against me, and the brokers want to kill my account, and we always find good excuses what could be wrong, right? So that's not the way to do it. As a trader, you need to take responsibility and make sure you know what you are doing. It's all about understanding first, okay? Price went back to the 36, which is the extension of this line, bounced on it, and fast then decided to move lower. This is because the main trend, the lower lows and lower highs, is still very powerful, and it's still going down. If you knew that at that point and at this point here, where I took my shorts at the beginning, you would know that you have to check after the bounce for short trades, and that we have like detailed rules how to do this. But if you don't know these things, of course you will have problems. Now price moved lower, and I have a position, it's a tiny one, starting from up here, that is now in profit with 1,800 pips, reaching the 2,000 pips area very soon. And what happens here is that As a swing trader, we don't worry too much because following the Spartan system means that we know how to take advantage of parts of our trade, meaning we take incremental profits on the way down. We create a win-win scenario, so whatever happens to a trade, we don't lose anymore. And the basic rules for that, just to make it quick for you, is if I have a huge stop on the daily chart of, I don't know, 400 pips, and because I use this big daily chart to take my trade, then at about 400 and 800, I would have taken out two parts of the trade to create a win-win scenario. And then the last lot, the last third, would be a bonus lot, and I can leave it as long as this thing is going down. Now, we are doing the top-down approach, meaning that we combine higher time frames with lower time frames. We look for 1, 2, 3 setups, meaning 1 would be a high, 2 would be a move in one direction, 3 would be the retracement back to resistance, and then we want the price to bounce at resistance, which is our 36 here, and the extension of this line, the two touches ending up here, and we want the price to reject, or we want this line to reject price, so it moves lower. And when it moves lower and we get a candle color change, yeah, I will not go into all details because we don't have time for that here, doesn't matter. Then we have an entry, and we will place our stop above here. But we don't have to use the daily chart to get in. We could go down to lower time frames, 4-hourly charts, 1-hourly charts, to look for Spartan setups here. Then we take the trade on the lower time frames to have a smaller stop. Makes sense if you have a big 400 pip stop on the daily. Let me switch to my 4-hourly chart now. On the 4-hourly chart, getting in here after another low and the retracement, so a new low and a lower high, also have enough resistance. This setup, this 1, 2, 3 setup, happened after the break. Okay, so that gives me an entry on the 2 to 3 line break, meaning this is 0.2, 0.3 is the retracement. This line breaks, the candle is closing below here. I would get in here and place my original stop over here. Suddenly I have half of the stop, only 200 pips, and I can create a win-win scenario already at 400. You can also say, no, my account is too small. Even if I risk only 1%, I want to get in a lower time frame. So you still combine your daily 1, 2, 3, your big setup. 1 second here. Sorry about that. So you can go back to your 1-hourly chart. Let me just do it quickly. Let me find this. You have to scroll. There we go. Now on the 1-hourly chart, this is still your daily 2 to 3 line break. This 1 to 3 daily break. You got a setup, meaning price changed direction. It broke our trend line, and it gave us our first 1, 2, 3, a new low and a lower high. Below that break, we got an entry here and a stop over 0.3. Basic rules. Now you have a 120 pip stop maximum from 100 to 120, half of what we had on the 4-hourly. Okay, you can even go down, I won't do it here, to a 5-minute chart, or some people like to use a 50-minute chart and find a setup there, as long as you do it below your 2 to 3 line break on the daily chart. The 2 to 3 line break was this line that we draw from 0.2 to 0.3, and we don't draw it like that. We draw it below our Heikin Ashi candles to see the clear break of that line, and after that line going down to the 4-hourly, 1-hourly, or even to the lower time frames to look for the first entries. That's the way to do it, and therefore having a smaller stop, less risk in percentage, and a bigger target. So when you enter here, look at this mouse here. If you enter here, and I entered this one on the 1-hourly, in combination with a 5-minute entry actually, I had a stop of 35 pips. Now having a stop of 35 pips, ending up having with the remaining part almost 2,000 pips, you can do the math. And this is what most traders don't understand, the importance of higher time frames going to lower time frames, taking decisions there, applying really great money management, and then gaining experience. And we got another entry on the daily chart, which was ranging for a while, got rejected here. And after 2 weeks waiting, it went my way. This was a swing trade setup, not like here. That was a day trading setup that turned into a swing trade. A day trading setup that took out the first and second lot quickly and left the remaining part, and it's still running after almost January, February, 3 months. Okay, very important. And this is a reinstated position, so I went in again because it just looked fine. And now if I check my 4-hourly charts and my 1-hourly chart, everything is still pointing my way. And as long as price is going my way, there's no reason for me to change anything. I don't even have to change my stop. I could take the stop from where it is right now. Let me try to grab this here. A bit funny on the lower time frame sometimes with this MT4. I could take it from here and just drag it and place it over my 36 EMA, which is my trend following EMA. And if price decides to go up quickly and hit that, I would still make profits. Okay, if I trail it to here, we'll close it with 200 pips for the remaining lot on this one. But I already created, now with a stop of 200, price is down 800. I created my win-win scenario by taking out the first and second lot, the first and second part of the trade, once and twice the stop in value. And I left my last position. This is my bonus lot. This I can enjoy and leave it running. For some reason we don't have internet here right now, but it doesn't matter. Therefore, go back to my weekly chart and say, okay, I took trades on a lower time frame, but just by looking at this chart and just by looking at the latest candle, it looks so powerful that there's no reason to get out. And that needs strength in your mind. It needs a strong mindset. You need a trader's attitude, and you cannot just play around with these things. And I'm going to teach you exactly how that works in our upcoming workshop. Also, what you get, because it's impossible for you to understand the Spartan system. That's a 30-minute video, right? In 30 minutes, and understand it fully. So what happens when you want to join our course, you will get a step-by-step guide explaining to you how the Spartan system works, with entries, with exits, drawing the trend lines correctly, money management, all these things, right? And during the live 5 days online course, I will also explain to you and show you again step by step how it works. And we're not going to do only the basic Spartan system. You can prepare for it, because when you join, you will get a link on this link, or in the members area. There you will find the basic videos. But during our 5 days events, I will explain to you also the other strategies, and I will show you my personal trading style, the little tricks that I apply when I trade, to not only follow my plan in my journal, but to take decisions sometimes aggressively. Yeah, and the difference between conservative trading, aggressive trading, and also the in-between part. Yeah, there are ways sometimes where I just don't want to overthink and say, okay, you know what, if it works, okay, let's do it like that. All these little things, and how to manage, especially how to manage the third lot and the remaining parts of a trade. This is something that many traders have trouble with. Yeah, they already know how to do it, how to apply the rules, the system rules. They already know how to see their trades going hundreds and hundred pips in profits, but they still struggle with management. What should I do with the last lot? What about, look at the charts here, if price decides to go back and then I'm giving back all those profits and I don't want to do this, what do I do? And if I enter on a lower time frames, do I have to manage it on a higher? Can I also manage it on a lower? How can I do this and that? All these little but very important questions I'm going to answer. I've prepared a lot of charts for you, and we are going to prepare for it over the weekend, the 3rd and 24th, and then we're going to apply what we have learned on Monday, Tuesday, and Wednesday. Okay, and my partner Dr. Jeff has another really great surprise for you, showing you what the big floor traders did, and this is still working. So please guys, if you are serious about your trading, if you really have passion for this as I do and most of our students and members, make sure you sign up for this. Okay, thanks for watching, and I'll catch up with you soon. Bye for now.